The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Asim in Dallas.
Hi, Tom. I love your show.
Thank you so
I've
much.
been listening to you since 2001 from my Seattle days when you were on a little station there.
I appreciate you growling and prowling with us out here, man. Thank you. Well, listen, thanks for bringing us from Seattle to Dallas, man. Appreciate it.
Yeah. I love all the hosts. I love your show. I'm addicted to it.
It's Hotel California. It's wicked, isn't it, man? Thanks.
All right, Tom. Nice to talk to you.
Have a great one. Have a safe one.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always do your best. Take action on your ideas. Doing your best means to take action. You can have many great ideas in your head, but without action upon an idea, there'll be no manifestation, no results, and no reward. Oh, yeah. Market-wise, let's take a look at it out here. Dow Industrial's down 15, NASDAQ up 9, S&P's up $1.50. Gold contract down $4.20, trading at $1,222 an ounce. Silver up 8 cents at $16.34 an ounce. Platinum flat at $9.92 a pound. A light sweet crude down 27 cents at $49.28 a barrel. Bonds, you get the 10-year note, up 12 ticks, 129.27. Bonds up almost a full point, 164.14. King dollar down 190 ticks, trading at 95.14. The euro is at 111, and the yen is trading at 109. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We're coming into the Memorial Day weekend. You're coming into window dressing. We're coming into Janet Yellen yapping tomorrow at 1:15 Eastern Standard Time, which is going to keep people on their toes until 1:15 Eastern Standard Time tomorrow, which in the market they don't want to do. That being said, this is what you have. You're at $209.48. Your high out there from April 20th is $210.92. The low of that high is $209.39. So bottom line is that if you close at, let's see, we've hit 209.71. That's good. This is gonna whack the high. Those spies want to basically get into that high. So that 20th is going to be tagged. We'll see if it gets tagged tomorrow. Volume is dying on the vine, which is actually what it should be doing when you're coming into the holiday weekend. On Tuesday, we did a volume of 93 million. Yesterday, we did volume of 79 million, and we'll do somewhere about 52 million out here today. NDX 100, the 3 Qs. What do you have with the 3 Qs? 3 Qs, same type of setup. You're up 33 cents. You're at $109.57. Now, the gap on this baby, well, you have two different areas. The high of when it gapped down is $109.72. We've hit $109.62. Volume is dying, but you know what? Somehow, some way, this is going to basically try to get into that gap, more than likely get to the 110.15 area, then give it up. And that's what I'm expecting, whether it's tomorrow, window dressing on Tuesday when we get back. Because when we do get back to work on Tuesday, folks, Tuesday is also going to be a slow day. Tuesday and Wednesday, however, you have window dressing happening. The small caps are dying on the vine out here. They're trying to get into their high from the 28th of April. That high was $115. The low of that high is $114 and $113.90. And we got into that today. It's not going to do the volume. We did 11 million shares. And the small caps also, the volume has died in the vine. On Wednesday, we did 41 million. Yesterday, you did 26 million. We're going to do maybe 15 million out here today. Gold contract. What do we have with gold? Gold contract out here today had a price spread from 12.20 to 12.37. You're at 12.21.90 right now. You've done 146,000 contracts. And let's just see how this thing's shaking out. So we take a look at it. It didn't hold price, yet you had a nice expansion with volume. Okay, so this is pretty cool. So what we had out here is this, is that the gold contract goes topside this morning at 1237 and has the volume behind it. So bottom line is that they're moving it around, but you're going to see gold to higher price. And we'll go right from there to the dollar index. The reason being, of course, is that the dollar can't hold price. Not only can't hold price, what you have out here is you have an expansion of volume as you move to lower price. So we're at 95.16. Yesterday, as we went higher, you did 11,000 contracts. Well, we've already done 18,000 contracts, and you're under the $95.40. So you have on the contract we're dealing with right now, which is a June contract. The number that you want to keep your eye on is $95.40. If we go to the continuous contract, what you want to look at is that on the continuous contract, you're dealing with $95.28, and right now we're at $95.16. So in both cases, it can't get up into a higher range. And that's saying that the volume characteristic, as we're going south, is saying we have sellers inside the dollar index. Now, let's go over to the bond market. So if we go to the notes, what you have with the notes is this. The notes right now, you have 1.6 million contracts traded, which is a monster, by the way. And the notes are saying Janet Yellen can be out here yapping as much as she wants. The Federal Reserve can be yapping as much as they want, that they're going up on rates. Well, the market's saying they're not going up on rates. Because what you have out here, and this is about as wild as you can get, is that you have a market that's up 2.5% this week. They couldn't take bonds on notes lower. And now what you have is that you're getting the notes are having a sign of strength, and they didn't take out the swing low of $129.02. And now they want to go out, take out the swing high. If we go to take a look at the 30-year, what you're going to see in the 30-year is this. 30-year, we've done 295,000 contracts. Same setup, man. In fact, the 30-year, the 30-year never even got close to its swing low of 160.31. We got down to 163.04. So the way that they both are setting up, folks, is that they want higher price, lower yield. And if we do take a look at the yields right now, what you have on the 10-year is this. Your 10 years yielding at 1.82. Tomorrow, 1:15. Janet Yellen's going to be in, I think, Boston, actually, Cambridge. She's doing an interview in Cambridge. And, we'll see what is said out there. I can tell you this, for the long holiday weekend, there are definitely plenty of large, I suspect, it would be more so the large bond operators that are, saying, great, Yellen has to be out there talking at 1:15 on a long weekend, but they're going to have to pay attention, So particularly because what has happened is that the other Fed governors that have been out here have been basically pushing that they thought that the June meeting, was basically on the agenda that we could raise rates. And, my take is that it's not going to happen. And part of that, well, a lot of that is technically it looks like it's not going to happen. Fundamentally, we'll talk about that when we get back, because the 5-year auction yesterday, folks, okay, the demand was amazing compared to what the supply was. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow down 11, NASDAQ is up 11, S&Ps are up 250. And as we do each and every Thursday at 20 past the first hour, we have our man, Mr. Andy Hecht. And don't forget, folks, every Tuesday, Thursday, Andy's got an outstanding show right here at TFNN, 5 to 6 Eastern Standard Time. As soon as I'm off the air, Andy's got a great show. You can get all the programming at TFNN right on your cell phone, folks. Right on your cell phone, you go to TFNN.com, hit Tiger TV, and you will get great video, HD, as well as audio. Now, when you come over to our website at TFNN, our man, Mr. Andy Hecht, also has been doing this college-educated commodity course. It's a beautiful thing. The 12 essential lessons for trading commodities. This started a few weeks ago. The first lesson was out there on May 4th. The second was on May 18th. Well, the next lesson, folks, okay, is next week, June 1st. It goes from 5:30 to 7:30. It's not too late to come into these. Why? Because these are all archived on your site. You can be there live with them, 5:30 to 7:30, and then the following is going to be on June 15th. This coming one, he's going to be talking about location spreads. He's going to be talking about inter-commodity spreads and quality spreads. So check it out on the front page of TFNN, and you can sign up right here, right now. Andy Hecht, what's going on?
Hey, Tom. Happy summer.
Happy summer. Yeah, summer's here, man. There's no doubt.
That's right. That's right. And happy Memorial Day. A safe and happy and healthy Memorial Day weekend to everyone and to you.
And you also, man.
And as you know, I'm trying to pull you out here when it's 120 degrees in July.
I know. It's a beautiful thing. I like it. I know.
No, it's all good. It's summer's starting. It's always a good time of the year, and should be interesting. Now, I got my first chart up here for you today.
Okay.
In honor of Memorial Day weekend, which is, by the way, the start of grilling season.
Yeah.
Yes. We have a bullish key reversal in the cattle market today.
In the cattle, that would make sense, man. I went to the store last night.
Exactly. You must have bought so much beef that you forced the price. It made a new low this morning, then the numbers from your purchases came in, and it forced it to a new high. So we'll see if we get some follow through. We have a gap on this chart to fill. So cattle is making, a bit of a recovery. Precious metals still continue to be weak. Gold down again today. I think it's the 7th or 8th day in a row lower gold prices. Look, I agree with you about Janet Yellen. I think gold will come storming back. We're in a correction. We got lots of room. We get down to 1176, which is a 50% retracement of the move from 1046 up to 1306. Same thing in terms of silver and platinum. But the important thing I think we all have to watch is next Tuesday, the closing level of the dollar index.
Yeah.
95.21 is the golden level. We close below there. I say we're still in kind of bear market territory. We close above there, it's going to be a bullish key reversal on the monthly chart, which is always important.
So
monthly charts are important.
Let's see. That means that you're using the continuous contract then, right?
Always, yes, on a monthly chart always.
Yeah, right, okay.
Right. So you know, we made a new low. We traded down to 91.88. Last month, April's highs, 95.21. I'm getting the chart up there right now. It's a little bit slow. There it is. And as we can see, last month, 95.21. We close above there. There could be some follow-through buying in the dollar. But don't worry, because the Fed, when they don't do anything in June, they'll put their foot on top of that too.
I get it. Okay, I get it.
Right.
So when you're saying a reversal, you're saying that when under the lows on the monthly, the 95.21 would close above the highs of April. I got it. Okay,
Exactly.
cool. Okay.
Exactly. And that tends to be a bullish pattern.
Yeah.
Now,
okay. Right.
And that's not necessarily positive if it happens for commodities in the short term. But Tom, what we're seeing in these grain markets is incredible. Let me show you a chart here. You'd
Okay.
be interested to see. You see this chart? That's the soybean crush. Soybean meal has absolutely exploded. It's gone from under $270 a ton in April to highs of $419 a ton today. That's a massive move. Massive move.
It sure is,
And
man.
now I want you to take a look. I can't put the stocks up, but I know you can.
Yeah.
We see what's happening in the crush. Let's look at the stock prices of the companies that are involved in crushing. Can you put up Archer Daniels Midland, ADM?
Yeah.
Let's take a look at that. And I want to just show folks how important these processing spreads are in terms of the real-time indicators of profitability for companies involved in these businesses. Look at what ADM has done.
Yeah, in 3 months, you've gone from 29 to 44, right?
Exactly. Look at Bunge, BG, same thing, in the same business. Again, these companies, when you look at the crush spread,
Yes.
it tells you about the profitability for these companies. What a great indicator. And I tell you, 95% of the people that have these stocks in their portfolios have no idea that this happens. So it's important to...
Okay, so here, can you just walk us through this again with the crush spread?
Sure.
Tell us how this works. Okay.
So this is how it works. Farmers grow soybeans, right?
Yeah, right.
And then they take these soybeans. You don't go to the store and buy raw soybeans. Well, maybe
No.
we go to a Japanese restaurant, we buy edamame, and
Yeah,
those are
right.
raw soybeans.
Right.
But other than that, we don't buy. We buy soybean products. Heck,
Okay.
You buy a steak,
Yeah.
you're buying soybean meal because your animals are fed. You know, your cattle are fed soybean meal.
I see.
You buy salad dressing or mayonnaise. There's soy oil in there.
Okay.
You cook. There's soy oil in there. So we buy the soybean oil products.
So you say they take the soybeans, and when you say the crush, that's the crush, and that's the...
They put it into a crusher.
Yeah.
They actually crush the beans.
Okay.
And what's left at the bottom is a mash. That's soy meal.
Yeah.
And the juice that leaks out is the soy oil.
And do they trade that separately, both of those?
Yes.
Okay,
soy
cool.
meal
Okay.
and soy oil trade separately
Okay.
on the exchange. Let me put up a chart here, a quick chart of the soy meal so you can see the incredible move. Look at that move. Wow. That
Yeah.
is a move and a half, right? So the companies that do this, the 800-pound gorillas, are Archer Daniels Midland and Bunge. And when the crush, I'll put the crush back up, when the crush
Man.
goes up, their profits go up. It's just like oil refining.
That's crazy,
like
man.
when Valero goes, you know, when
Look at
when
that, though.
oil
Wow.
refining companies,
That's like parabolic.
it's a parabolic. So their profits are parabolic. So,
Yeah,
so this is so important to understand and watch. It's something that I really spent a lot of time on in the course.
Yes.
But it's something I want to point out because it's happening right now. You know what I mean?
That's so cool, man. I know.
It is cool. So let's take a look at the other grains, and they're kind of following in sympathy. You got corn rallying. We're above $4 a bushel now. Again, rallying with soybeans, and there is a a correlation there, because what I'll be talking about on June 1st is that there's substitution spreads. I call them inter-commodity spreads.
Yes.
But farmers have a choice of what they're going to plant, and they're still doing some planting. And believe me, because of what happened in soybeans, they're planting lots of soybeans now, and they're not planting as much corn. So the corn expectations for the crop this year will go down, which lifts prices. And look at what's happening to corn prices here. They are above $4 again, which is very interesting. And you're also seeing sympathetic rally in wheat. If I can get a wheat chart up there. There it is. You saw a nice move up today in wheat.
Oh, yeah.
So the grains, baby, are going.
3.27%. Andy, just stay right there, folks. So
Absolutely.
we're coming right back. Our phone number is 877-927-6648. Yeah, the wheat rally is strong, man, no doubt. You have the Dow Industrials right now down 1. S&Ps are flat. Nasdaq's up 14. We're going to be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 8, Nasdaq's up 12, S&Ps are up 2. We're talking with our man, Mr. Andy Heck. We are talking commodities. And, of course, don't forget, folks, all the programming, get right on your cell phone at TFNN. We do live programming Monday, Wednesday, Friday, 8 o'clock in the morning to 5 in the afternoon. Tuesday, Thursday, 7 in the morning to 6 in the afternoon. As soon as I'm off at 5, Andy's on 5 to 6 every Tuesday, Thursday. Get it right on your cell phone. Now, just try it out, folks. Go to TFNN.com in your browser, in your cell, hit Tiger TV. You'll be happy you did. Okay, so next chart we're looking at, Andy?
Let's look at oil and
Oil.
let's look at energy. I mean, first I got to say something about oil because it traded over $50 a barrel today,
Yes.
up to 50.12. And by the way, Tom, from February 11th until the highs today, 92.4% rally in crude oil from the lows. That is a hell of a rally. But I really wanted to talk about natural gas today because no one's looking at
Okay.
it. You know, here at TFNN, what we love to do is we like to give our listeners real value and really explain what's going on in markets.
Yes.
And I think it's an important kind of lesson here in natural gas today.
Okay.
So let's look at what happened with the EIA. The EIA reported an injection of 71 billion cubic feet into inventories today.
Yes.
And the price went down a little bit, but I want to point out that last year, the same week, there was an inventory injection of 112 BCF into inventories. So the inventory, and we've seen this each week during injection season. The injections are slower than last year, and why is that? Because the price is around $2.
Yes.
It's cheap. Now, open interest is up about is at about 1,073,000 contracts. And even though natural gas hasn't really been going anywhere, Tom, the shorts are hanging in there. And let me show you why. This is going to blow you away. If I show you the spread between the June contract and the July contract, here, let me just put up NGEN minus NGEM. I can get that up there. I'm having a hard time. Let me just see.
That's all
if
right.
I can't get it this time,
You
I'll
can,
get
you
it.
can just explain it to us. That's all right.
I'll explain it to you. Okay, so now natural gas is rolling
Yes.
from June to July.
Right.
Right? June to July futures. What's happening is anyone who's short has to buy back their June shorts
Right.
and roll out to July.
Right.
Because of the oversupply in the market, the contango is huge. Contango means that deferred prices are higher than nearby prices.
Yes.
They are getting paid 22 cents to roll from June to July, the shorts. 10% of the commodity.
Wow.
That is why they're staying short.
That's
why the market's
amazing,
still-
man.
That's amazing. So, in other words,
Yeah.
the nearby price is about $1, $1.91.
Right.
And the July price is about $2.14. They're getting paid massive, 10% of the commodity value. That's why open interest is not going down, because it's like a cash machine for the shorts. Because of the oversupply in the market, they get paid each month to stay short the market. And as long as there's not an upward, explosion in price, they're good. And what we've seen each month is we've seen gravity take the price of the next higher priced contract down to the $2 level.
Yeah.
So, and
So
then
it
they're able
seems
to
like-
roll again. Right.
Wow.
It's a beautiful thing, right?
Okay.
So I want everyone to understand what's going on there.
So
Because
here,
even
let's
though the
just
price isn't
go over
moving-
this again, because I
Sure.
understand what you're saying, but I had to think it through for a second, okay?
Okay.
Because what happens here, folks, is this. So picture, when you close out a shot, they're closing out this month, folks. So what ends up happening is this month, that's where you're at the $1.91, right?
Right.
And they're going short again, and the following month it's higher, folks. Because when you first said, I says, "Hold it, that doesn't make any sense. We're actually paying more." But that's what you want when you're short. You're selling higher again, and as you said at the end, gravity keeps taking it down, so they end up buying it back cheaper at the end of the contract. Yeah.
That's right. And as long as this bear market stays intact, supplies stay really high, the contango stays in the market,
Right.
it pays to be short. The market's not moving that much, but they get a big bonus at the end of each month. Think of it this way. If you do it 10 months in a row,
Oh yeah. It's
you
too-
pay for the whole price of the commodity.
Yeah, exactly.
I mean, that's crazy.
Yeah. No.
It's a crazy. Now, I want to warn people. This is not, nothing is guaranteed.
Don't go do it, folks. Right.
Right,
Exactly.
right.
Yeah.
But this is what's happening, and what I'm trying to explain is why open interest is staying high and why the shorts are staying with their positions.
Right.
So,
Wow.
and this has been going on for a long time now.
Yeah.
So, contango, a beautiful thing if you're short. If you're long, now, I'm starting to think that natural gas is going to barbecue these shorts eventually, because that there's always a price to pay.
Right.
Right?
Right.
So when it starts going up, they're going to have to scramble and cover their positions. We saw that in January when the price moved in like 2 weeks from $1.68 to $2.50. They got blown away, right?
Yeah.
The problem is that to be long, you have to pay this premium.
I know.
22 cents this month.
Right.
So it's called the curse of contango for longs. Now, in a market that's very tight, where there's a backwardation, right, where deferred prices are lower than nearby prices.
Okay.
When you're long, the same thing happens to the longs. They get to buy back they get to sell out the expensive item and buy the future at a cheaper price. So the intra-commodity spreads, the time spreads, calendar spreads are so important. They tell us so much about supply and demand, and they can be much more volatile than the outright prices themselves. So we have to pay attention to this. And believe me, in the course, I spend so much time on these intra-commodity spreads, intercommodity.
No, I can see why.
Because hey, they are the market structure. They are the guts of commodity trading.
Yeah, that you can see that. And what's amazing is that you're talking about markets that are so huge and liquid, and like they're not running. They're running our lives though, because between the food and the gas and the oil, guess what? We need it all, right?
Yep. We need it all. That's no question at all. Hey, something else I wanted to bring up. I'm writing a little article for Seeking Alpha that'll be out on Monday.
Okay.
We always talk about changes in the overall commodity market.
Yes.
And I'm seeing two big changes. Well, three big changes. First of all, we know because of lower prices, there's a lot of consolidation in the industry.
Sure.
The second big change is that the pricing mechanism is slowly moving from a dollar-based to a Chinese yuan-based. This week, at the Shanghai Futures Conference, the vice chairman of the Regulatory Commission for Commodities in China stated that the country would like to take over and move in for pricing of all commodities because they're the biggest consumer. And they're going to start with iron ore, rubber, and crude oil, and then they're going to look to others. And the IMF is working with the Chinese to devalue the currency to make it a reserve currency. So that's an important development to keep our eyes on. And the second big development is the widening of the Panama Canal, because this is going to improve logistical routes for commodities around the world and cut down on shipping costs.
Yeah, no,
so
that's
interesting things going on.
There's no doubt, man. That no doubt is a big one.
That's a big one.
Well, listen, man, we appreciate it. Look forward to the show at 5 o'clock.
Happy holidays.
That's a bit happy Memorial Day, man. Thanks so much. You stay right there, folks. We'll come right back. Dow Industrials down 13, Nasdaq up 10, S&P's up 1.5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is flat. NASDAQ is up 12. S&Ps are up 2.5. We go take a look at how we're going to come in volume-wise. We're going to be short volume. We're at 589 million on NYSE, so that's going to come in maybe about 750 on the NASDAQ. We're at 1.3 billion, so that's not bad. NASDAQ's going to come in 1.6 probably. So if we go take a look at that, yeah, see, that's interesting. The composite, man, the composite's at 49.06, and that gap, the bottom of that gap is 49.32. It's going to go for it. This is going to be, it's going to be wild watching this whole thing shake out tomorrow, because the way this is playing out right now, coming into this close, looks to me like it's going to go for it. And, you know, we'll have another contraction of volume, more than likely, as it tries to get up and test the 49.66, which is 60 bucks ahead of where we are right now. If we go take a look at that Dow, the Dow right now is at 17,842. Now, the low of the high, that could be game. The low of the high is only 18,031. Yeah, the high is 18,167, but the low of the high could be game. And the cash looks to me like the cash is going to get, you know, that high looks to me like it's going to get tested, because the high of the cash, the S&P cash, is 2011. And the low is 2096. We hit yesterday, I think, 2099. No, 2094. Or 2092. So that baby also wants to get hit. And, you know, we'll see whether it can hold on price or not. Inside the Dow Industrials today, and what we do have, after the closeout hit today, there's a lot of numbers coming out. So this market's going to move around for 15, 20 minutes in the futures market. Inside the Dow Industrials today, the mover out there is Apple. It's up 0.9%, or 98 cents. That's the top dog, which is not much. Coca-Cola is up 0.8% of 37 cents. The laggards, you get DuPont down 1.7% or $1.20. Goldman's off 1% or 183. Inside the NDX 100. Yeah, this is good old. This gave it up something. No, maybe it didn't. Dollar Tree, yeah, no, Dollar Tree is still the winner out here. This is pretty amazing, actually. It's up 13%, $10.63. Costco is up 3.8%. 554. You have Yahoo up 3.3%. 120, and Micron Tech's up 3% at 37. Taken away from it, this is what you have. You have Charter Communications down 2.8%, or $6.50, and Net Appliances down 2%, or 57 cents. One of the questions in the den. Where do you see gold going into the long weekend, or is it about yelling? Well, it's always about yelling in the Fed, because the correlation between gold, silver, the Fed, short-term rates, long-term rates, and the dollar are all intertwined. So when I look at it, guess what? The cool thing is that let's go pull it up. So if we take a look at the gold contract, what you're going to see is that gold got to the 1237, couldn't handle higher price, volume was decent intraday, and it's like, okay, you can make the argument, is this pushing the lows with volume? You can almost make that argument, which is really dangerous. That being said, when I take a look at, let me pull this up here. When you pull it up intraday, this is saying if I was trading this tomorrow morning, which I'm not going to be at, because I'm going to have a decent weekend too, is that the gold wants to go back to 1237. You get volume at 1237, you get volume at 1229. You take that, and then I take the dollar index, and the dollar index and bonds are basically given the most amount of information out here. That's what it is, and that information, is that it can't hold price. That's what that comes down to. Danny Atlanta is saying the volume of the gold contract was to the downside, and it wasn't to the downside. Here, I'll bring it back up again so you can see this. And if you go look at this intraday, what you're going to see is that I guess no, it was. Thank you. It was. So you had 2,000 contract. Oh no, it was the upside. I get the dollar up. Okay, so the dollar volume was to the downside intraday, and you're going to see. I thought when I brought this up first. Yeah, the volume was up. You had right off the bat last night. You had 1,600 contracts. And there's a lot more than that. The volume was up. The last time we had volume on the way down, and the gold contract was 1226. The rest of this was light volume on the way down. So if you go over to the GLD and we take a look at the GLD, what you're going to see out here is that the GLD, let's put this on a weekly. Okay, so thus far, this is what you have on a weekly. The GLD, we're at 37 million shares, and you're going into 125 million, and you're going into 56 million. So that's a good setup. You took a look at the SLV, and all of these right now, folks, you can put them on weeklies, and you can just guesstimate how much volume is going to get done tomorrow. So we took a look at the SLV. The SLV has done 5 million. You're at 1552. If you close over the 1553 tomorrow, you're in good shape. You get 17.5 million. You're going into 17.5 million with 5.1. See, the cool thing is when you do go down and you come down hard, which we did the week of the 19th of May, this is in silver, and then you try to bust that too quick, there's not enough energy to bust it. That's how that thing shakes out. If we take a look at the XAU and the HUI, we'll put this on a weekly just to see how it's set up at this point. Yeah, it's light volume. So the XAU has got down to $77.99 this week. We're at $82.52. It was coming into 250 million versus 136. You look at the XAU and the HUI, and this thing was like awesome. It's pretty sick, actually. That's on the weekly. So now let me go to the daily just for a second, because I'll add that in. And HP. So it's 50 million you got to add in. So let me just take this again, take a look at it, make sure that we get this number straight. So we're at 136. No, we're at 136. Yeah, we had 50 million and 186. So it's 186 against 250. You look at the SLV. No, sorry, Gold Bugs Index. And we put this up also. That's the HUI. $77 million we're 77 million against 135, and that does 30 million. So you're 103 million against 135. So you've already got into the lows. You're rejecting them. If we stay flat or just even go higher tomorrow in the XAU, the HUI, it's a rejection of lower price on a weekly with lighter volume. You stay right there, folks. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is down 22. You get the NASDAQ up 7. S&P's flat out here. And if we do go take a look at the SPY, we're just seeing coming into this close is that you're going to get a flat market. If this thing wants to go sideways, I suspect we're going to have a sideways move tomorrow. It looks like what you are going to have is that the whole Janet Yellen thing at 115, will put some volatility in this market, and that's going to be really unusual for a long holiday weekend. Hey, we'll see where it shakes out. Because when you go overseas, if we look at overseas, it might be a non-event too. That's the other side of it. Yeah, the more I think about it, it's probably going to be a non-event. That really blows some minds. Because if it's a non-event, so check this out. This is what's going to be wild about. If it's a non-event, so what large bond holders are worried about is this. Large bond holders are worried that more identification will come out that rates are going up. Because if rates are going up, and they do, raise rates, folks, immediately bondholders lose money hand over fist. Bonds are always some of the safest trades if you buy bonds right after Treasury, and you hold them to, the expiration. That's no problem. That's you're going to get paid your coupon, you're going to get paid your principal. That being said, plenty of these big bond funds, guess what? It's a fund. So what they've done is that they're buying bonds over par. And what that specifically means, let's say a bond is for $100 or they're $1,000. Let's say it's $1,000, and they have a bigger coupon rate, so it's a bigger interest rate that it's paying. That bond could be running from $116 to $120, and excuse me, sorry folks, excuse me. And so what happens there is that you only get back the $100. That's all you're going to get back, even though you paid $116. And you're doing that because you're getting a higher coupon or higher interest rate for the length that the bond is good for, okay? So that's been going on, and it's been going on like huge. Thanks, Danny. Appreciate it. So what happens when rates go up? Well, when rates go up, ASAP, like split second, the price of bonds that are over par go down so fast it's unbelievable. I mean, you're talking about crushing. The biggest crush I've ever seen in the market, in the bond market that is, was in 1994. A good old Alan Greenspan, he just crushed that market beyond belief. I mean, it was like heavy duty business. I believe in a matter of 6 weeks, it went, principal-wise, it went down about, 27, 34%. It was an outrageous number. And just as now, people that buy bonds are never expecting to lose money. And as I said at the beginning of the conversation of this segment, if you own treasuries and you bought the treasuries from the treasury, you're not going to lose money because you just hold them, you're going to get your money back. It's buying bond funds that are priced at higher levels than the bond themselves. So we'll see if, in fact, anything gets said in this. It's an interview. That's what it is, folks, okay? It's an interview with one of the economists, I think from either MIT or Harvard. That's what's going to be going on at 1:15 tomorrow. And the guy that is interviewing her, I have to pull him up more. He's not only a bright guy, but I'm trying to figure out which way his view is. Because that does make a difference, too, as to what he skews towards, because it will make a difference on the questions that he asks. You stay right there, folks. We're going to be coming back with a lot of numbers after the close. We're in the middle of the beginning of earnings. We've got a bunch of numbers coming out. Dow right now, down 25. NASDAQ up 6. S&P's flat. We're going to be right back.